Q1 earnings season well underway and almost over, and this quarter has been quite a bumpy ride for companies. Morgan Stanley is expecting the rally will reverse course in the months ahead. Analyst Andrew Sheets seeing earnings per share dropping 16% this year. So for much more on this, we've got Yahoo Finance's Jared Blikre at the New York Stock Exchange with more of the details. Jared.
That's right. As the melt-up continues, some would say within a hair's breadth of a new bull market, something like that. I'm not a stickler for these definitions, but yes, the S&P 500, if it were to close right now above 92, 42.92, it would be a bull market by some people's definition. Does that change the character of the market just because we said that headline? No. But here's the S&P 500 over the last 3 years, finally within basically the midsection of those losses right now and trying to break out. I just want to show a quick chart. I showed this last week really quickly of the Hang Seng. Be careful what you wish for. This is a 3-year chart. Here to here, the top to bottom was about a 60% decline. Or right here triggered a new bull market, and as soon as that happened, well, it was off to the races to the downside. So these things still can be tricky. It doesn't mean we're out of the woods just yet, but let me show you what's happened with the S&P 500 on here's on the 1-year rolling basis. NASDAQ has also approached its August peak there. Now, however you want to classify these things, Mike Wilson at Morgan Stanley thinking we still got some more bearish action to price out, but however you want to price in your favorite scenario, there's a lot of pain potentially to be had throughout the summer, and that's one of the things that Mike Wilson is talking about when he sticks by his year-end price target for the S&P 500 of 3,900. So that's what, about a 15% decline from here. Still, if we were to reach these levels down here, is that going to be an absolute disaster? I don't think so. I think the potential for an absolute disaster comes with increasingly bizarre readings, I guess conflicting readings between the non-farm payrolls that we get and also the CPI numbers. Now, I was talking about the market on Friday. It was incredible to see the Dow's outperformance. I went back. We haven't seen the Dow outperform the NASDAQ that way, and small caps outperform the NASDAQ that way since mid-2020, I believe. It was at the beginning of that pandemic bull market. And then you got to go back 20 years. So there are some strange things happening in the market right now. It is nice to see the price action, any kind of bullish price action that we're seeing here. But with the debt resolution, with that, I'm not going to say it's in the rearview mirror, but soon to be hopefully in the rearview mirror. That means the Treasury is going to be winding down. $1 trillion in liquidity could evaporate by year end, and I think that's contributing to the narrative here. But nevertheless, you can't argue with the tape, and we've had some pretty bullish price action, particularly since that payrolls report we got on Friday.
Jared, we keep using that phrase "melt up" this morning, yes. And we've sort of been discussing what it means. It's obviously sort of a oxymoron, I guess, when we're talking. So what do people need to know about what that means, and kind of then what happens?
The market's job is to frustrate the greatest number of traders at any number of time, to separate them from their winnings, and sometimes their future losings as well. Let's go back to the Wi-Fi Interactive. What does a melt-up mean? Well, it's kind of this slow, steady grind higher. Some people call it the wall of worry, but you see the market is discounting all these bearish headlines that we're talking about recently, and it still manages to exhibit some bullish price action. So not anything huge, but just kind of melting up as you might think it's there. And so the other thing I mentioned just now, that wall of worry, why does that matter? Because in an environment like this where investors are anybody who's flat the market right now, who's professionally managing money, is basically short. And that's a comment that stuck out me from Macro Alf over the weekend over at his report. If you're looking at this market and you are not invested in it and you are way underperforming your benchmark, whether it's the S&P 500 up 10% or the NASDAQ up 25%, guess what? You are thinking about how to get in this market and chasing it at these highs. There are people doing that right now, which sets up a potential pain trade to the downside, guys.
Whew, a lot to brace for. Thanks so much, Jared. Appreciate it.